The Spin-off Podcast Network. AI wouldn't be possible without the internet, nor the internet without computers. Computers came from brilliant brains, and even they had to learn that fire was hot and water was wet. The world is constantly shifting, changing, evolving, and Daylight is an award-winning creative and technology studio that helps ambitious clients shift with it. Search daylight.nz to get in touch.
This episode is brought to you by State Farm. From your morning podcast to your afternoon playlist, State Farm knows you personalize your entire day, and that's why State Farm helps you personalize your insurance with the State Farm Personal Price Plan. It offers coverage options that help protect what you care about most at an affordable price just for you. Like a good neighbor, State Farm is there. Prices vary by state. Options selected by customer. Availability and eligibility may vary.
When the Facts Change is brought to you by the Spin-off Podcast Network in partnership with Kiwibank, the bank for Kiwi looking to get ahead in business and in life. A bank that delivers expertise and banking know-how, smart advice for business owners wanting to invest, grow their business or diversify. A bank that adapts with technology through the lens of its people and customers. It is a bank with heart that is driven by its purpose. Kiwi making Kiwi better off. Usually we know when the facts are going to change and we've got a general idea of how they might change, and often it takes quite a while. And then sometimes the facts change real fast and you have to react. That's what we're doing this week. It's what you'd call a pop-up or emergency when the facts change, a special episode on the surprise resignation of Adrian Orr as the Reserve Bank Governor, 3 years early, without any obvious explanation. We've heard from Nicola Willis, the Finance Minister, that she's not going to say why he's going, that we need to talk to the board.
I'm not going to characterise the reasons for Adrian Orr's resignation. Those reasons are his own and are for him. This is a decision that the Reserve Bank Governor has come to, and it is therefore for him to characterise his reasons.
And when we recorded this, we didn't know exactly why the Reserve Bank Governor had resigned. And so we'll have to keep an eye on that. But it's worth, though, looking at his legacy and telling the story of Adrian Orr in that job since 2018, his reappointment against the wishes of the then opposition, who were very unhappy about not being consulted about his reappointment and were critical of Adrian Orr's leadership of the Reserve Bank, not just through COVID and after COVID, but before COVID in a couple of ways. Both how he, as the governor, ran monetary policy and also what he did to toughen regulation and capital requirements for the banks. This week on When the Facts Change, we talk to one of the Reserve Bank's staunchest critics. Oliver Hartwich is the Executive Director of the New Zealand Initiative and, along with colleagues, has written reports criticising the Reserve Bank's use of monetary policy, particularly late in 2020 and through 2021, when the Reserve Bank printed money to buy government bonds, relaxed the loan-to-value ratio restrictions, and lent money cheaply to banks, which was a factor in pushing up house prices dramatically in 2020 and 2021. He also effectively doubled the capital requirements for banks from 2018 onwards. He went through a process of essentially telling the banks to hold more capital against all their loans, which the banks didn't like and argued was going to mean they had more expense and wouldn't be able to lend as much money. And in recent years, we've also seen the Reserve Bank criticised for effectively making it harder to become a new bank in New Zealand and therefore restricting competition against the Big Four. So we hear from Oliver Hartwich. He describes what he thinks of as Adrian Orr's legacy and makes an interesting suggestion for a replacement. Jens Weidemann, the former head of the Bundesbank, who was on track to be the head of the European Central Bank. But Oliver Hartwich, who comes originally from Germany, suggests his fantasy Reserve Bank governor would be Jens Weidemann. Then we talked to Jarrod Kerr, a friend of the show from Kiwibank, the chief economist, who's been there all that time through the Reserve Bank governor's reign as the governor of monetary policy, and has been critical too of the Reserve Bank's holding interest rates up for longer than some would like, particularly through 2022 and into 2023. And has argued that the Reserve Bank should have cut sooner and more. We talk about how the Reserve Bank has managed its communications, the changes involved in its mandate and its use of a monetary policy committee. Adrian Orr was not a quiet, in the background sort of central banker. He was unusual. Everyone knew his name. When he did things, it affected everyone. And so the surprise departure of Adrian Orr is definitely one of those days when the facts changed. That's this week. I'm Bernard Hickey for When the Facts Change. Well, kia ora, and welcome to When the Facts Change to Oliver Hartwich, who is the Executive Director of the New Zealand Initiative. Great to see you and hear you, Oliver.
Great to be with you.
Now, we're both tragics of monetary and fiscal policy, and the New Zealand Initiative has very strong views on both, and not just monetary policy, but prudential policy as well. Adrian Orr has resigned with effect from the end of this month. What do you think his legacy will be?
I think he leaves the Reserve Bank with a bit of an image problem, because over the past few years, it has lost a lot of its credibility for serious policy thinking, for serious monetary policy. And of course, he also leaves with a stain of having been a Reserve Bank governor, with a massive spike of inflation, of course, after COVID, where it briefly went above 7%, where it just shouldn't be. I mean, the target range is 1% to 3%. And so that will always be a bit of a stain on his legacy.
So why should he be responsible for that, given that central bank governors around the world fail to keep inflation between 1% and 3%?
Yeah, because it wasn't necessary actually to get to that point in New Zealand, I think. We all were surprised, of course, when COVID happened in early 2020, and nobody knew what kind of beast we are working with. So I'm willing to forgive any central bank around the world, including the RBNZ, the mistakes they made in the first few months, because this was an unprecedented situation. We have never seen anything like this in our lifetimes, and therefore it was difficult for central banks to figure out what they're dealing with. And yet, I think by about end of May, early June 2020, if you remember, Bernard, I think it became clear that what we're dealing with is not a typical kind of recession of the type we had in the global financial crisis. This was not a Keynesian-style demand slump. It was actually a supply-side shock. So we had disrupted supply chains. We had an exogenous supply shock, I would argue. And textbook theory is if you then try to simulate the economy in the face of a supply shock, what you get is inflation, because you're just basically pushing up the price level. And that's what they did. And so, as I said, I would be willing to forgive them for everything they did in the first couple of months of COVID. And frankly, I was in the same camp because I didn't know what was happening. But as the picture emerged towards May, June 2020, it was clear we're not dealing with a typical kind of recession where you want to stimulate. The problem with the Reserve Bank was that at that stage, they should have actually changed course. They should have said, actually, if we just print money, if we do quantitative easing, if we go to potentially, they were talking about the time negative interest territory, we are going to make the problem worse because the medicine didn't fit. And instead, they went on, they created more money, they got an indemnity, of course, from the Minister of Finance at the time, so that the losses they would eventually incur would be taken by the taxpayer. And in the end, they printed, in inverted commas, electronically created about $55 billion worth of new money. And that then led to the money sloshing around the economy, briefly pushing up house prices to ridiculous levels, and then also leading to that spike of inflation of more than 7%, which then afterwards the Reserve Bank had to try to fight by driving the country into a deliberate recession trying to get that price stimulus out of the system. So I think this was a miscalculation on a few fronts. So first, they misunderstood the nature of the crisis they were dealing with. And as I said, the first few months I would forgive them. But once the picture became clearer, I think there was absolutely no justification for continuing with these policies. And then they kept them going for way too long. And once they realized the damage they had done, they went fully into reverse, basically giving the economy whiplash and now going in the opposite direction. So if you compare this to other central banks around the world, you compare this to what happened, for example, in another small economy, Norway, or maybe even in Australia, their steps towards monetary easing during COVID were much lighter, and therefore they didn't actually have to give their economies this kind of whiplash by going into full reverse afterwards. And in both cases, on both occasions, I believe that Adrian actually overreacted and he created a lot of damage along the way.
So that's on the monetary policy side, but he was also the governor of the Reserve Bank, which runs prudential policy for our banking system and some non-banks as well, and insurers. And he was quite active through his period from 2018 onwards in requiring the banks to essentially double the amount of capital they've got. And also we've had, since the reimposition of LVRs, we've now got the debt-to-income multiple controls. What's your view on the Governor and the Reserve Bank's actions on prudential policy?
Well, first of all, as you rightly said, he was confused by having multiple mandates. So when the Labour government came in, they changed the mandate of the Reserve Bank from previously just a focus on price stability towards also basically a macro steering of the economy. And then they also said they should look into house prices as well. So in a way, they were conflicting mandates for the Reserve Bank. That's not Adrian Orr's fault. That was just something the government did. But then, as you say, he was also responsible for prudential regulation. And in that function, I believe he made a mistake because he wanted to protect the economy from banking crisis in the future. And that's, of course, laudable. Nobody wants to see a banking crisis, but he overdid it. So he wanted to take the Basel requirements, basically, that all central banks around the world have to play by, and make this even stronger as a framework. So he was gold-plating these international rules that he found and then said, well, on the back of an envelope calculation, we want to limit these financial crises to 1 in 200 years. What it meant was actually that banks now had to hold a lot more capital in the economy. It also meant that the larger banks found it easier to comply with these rules, and that in turn then blocked the entry of smaller competitor banks. And so what he achieved was something that wasn't probably quite right. So he limited the amount of competition in banking. He also ensured that interest rates would be higher than otherwise they would have been, because now banks had to hold more capital and they had to, of course, make up for that capital they held. And whether this actually achieved the extra stability that he wanted is a questionable matter. I mean, the thing is, just to give you maybe an analogy here, if you have a glass house and you want to grow some plants inside the glass house, the point is actually that you protect it from the outside air and you keep the heat trapped inside. But it doesn't matter then if you have normal glass or if you have bulletproof glass. The bulletproof glass, of course, costs more, but it doesn't actually trap more heat. And in the same kind of way, we had this stuff in the banking sector. So now we had regulations that made this totally bulletproof, the banking sector, from anything. But the question is actually, did it actually yield too much more of this benefit, of the heat that you wanted to have trapped inside? And so I think he overdid it. And when we then, at the initiative, pointed out that he did this without a proper cost-benefit analysis, that's when relations between us and the government are actually soured a lot, because he was very defensive. He said, no, but this is something we have to do because we want to keep it safe and we want to have it stable. And of course, we want to keep it safe and stable too. The question was just, was the extra cost justified to achieve that goal? And on that front, I think, again, Adrian Orr didn't perform particularly well, because I believe in the end, he cost the economy a lot more money. He cost ordinary homeowners a lot more money because they had to pay for this with their mortgage rates without actually yielding any equivalent gain in financial stability.
So just to challenge that point on how the Reserve Bank regulated the banks and required them to hold more capital, Could you argue that our banks are more concentrated than in any other market? And when he did it, we didn't have a term deposit guarantee, and in effect, there was a de facto requirement for either the government or the Reserve Bank to bail out the banking system if any one of them got into trouble. And the fact they didn't get into trouble during a crisis is a testament to that, and that New Zealand is special, and therefore we need the 1 in 200 year protection rather than 1 in 100 years.
I think there are quite a few questions together. We probably have to separate them a little bit. Maybe starting with the deposit insurance scheme. If you have a deposit insurance scheme, that effectively takes care of some of the things you want to do with macroprudential regulation. So you might not even need the other forms of regulation if you have a deposit insurance scheme, because it takes a lot of the risk out of the system. Actually, doing the two things at the same time might be a bit of a double up that you don't need. The next question you asked was, is the banking system particularly concentrated? And you might say so because we have 4 large Australian banks. We've got Kiwibank as a smaller New Zealand competitor, plus a few other but really niche banks. You might say this is concentrated. Then again, it's a relatively small economy. We've got an economy of 5.5 million people. I mean, how many banks do you really want to have? But in any case, if you think that there is not enough competition in the market, what you want to do is you want to ensure that it's easy to access the market and enter the market. If you're a newcomer, if you're a bank in any part of Asia or America or Europe, looking at New Zealand thinking, well, might this be the next market where we want to be operating? In which case, you should make it easier for them to enter. But the problem that we had is actually because of all these regulations, we made it harder for newcomers, for new entrants to come into the market. I mean, I can tell you from our membership, I mean, we've got all the big 4 banks as members. When you talk privately to these bank CEOs, they will tell you that these regulations are a pain because they barely have a chance to really deal with them because they are so onerous to perform to. But then they say, and I think also quite honestly, but they feel for their smaller competitors because if they as large banks are struggling to deal with these regulations, they can only imagine how hard it must be if you are a much smaller bank, let alone a newcomer, to play with the same rules. So I think perversely, if you are concerned about the concentration in the market, you want to actually reduce the level of regulation because otherwise you will never see newcomers, smaller banks establish themselves in the market to provide competition. So I think on that front, Adrian Orr got it wrong too.
So we're going to have a new Reserve Bank governor. What do you think that person should do? How should they do things differently?
Well, as I said at the beginning, I think the Reserve Bank has a bit of an image problem now because it lost a lot of its credibility for decent policy making and sound economic analysis. The Reserve Bank of New Zealand had a reputation as a very fine, small central bank many years ago, but I think under Adrian Orr, sadly, it lost that. And so what you really want to do is you want to restore that image. You want to be seen as a reliable partner in the financial sector. You want to be taken seriously. You want to be taken seriously for your research and for your policy work. And so what I would do now, if I was Minister of Finance, I would now look for candidates for the Reserve Bank governor position to actually bring this kind of image into the Reserve Bank. And so what I have in mind is I would probably see around the world where are the most stability-oriented banks, reserve banks I can find. Where are their leaders? What profile do they have? Can I take any of them or former bankers? And I would like to try to get this image transfer from stability-oriented central banks into the Reserve Bank. The other problem that I would see if I were Minister of Finance, the New Zealand central banking community is a very tight and close-knit community. These people have all known each other for 20 or 30 years. They've gone to the same schools, they've studied at the same universities, they play golf at the same golf courses. The problem with that is, of course, nobody likes to hurt anyone else. And you all work together, and you've worked together in the past, and you will work together in the future. The problem is we have a Reserve Bank that has lost its way. So I think it actually takes a disruptor. It takes someone from the outside to actually clean up the mess without actually being concerned, well, I can't do this because I've known them for 20 years. And so that is another argument why I think we should take someone from the outside. We should try to identify central bankers from around the world, coming from stability-oriented central banks, who would then take this position for 5 years with a clear mandate of cleaning up this place and making it once again a top-notch, world-class central bank, and then leave again, because I think that's what the central bank currently needs.
So you keep an eye on the central banking world reasonably closely. We all also play fantasy football these days. So who would be your fantasy Reserve Bank governor?
My fantasy Reserve Bank governor is Jens Weidmann. So many New Zealanders might not have heard of him, but Jens Weidmann was president of the Bundesbank for 10 years. So the Bundesbank has a reputation among central bankers as one of the most stability-oriented central banks in the world. And that is for Germany's history, of course. So Germany in the 20th century had 2 hyperinflations, and they learned their lesson, and they instituted the central bank after the Second World War with a clear price stability mandate. And basically that's the raison d'etre of the whole organization. Now, of course, the Bundesbank is part of the ECB system, so part of the Euro system. And Jens Weidmann, who was previously chief economic advisor to Chancellor Angela Merkel, became its president and then led it for 10 years. Weidmann was at the time seen as a potential and probably quite likely successor to Mario Draghi when he was the ECB president. But because the Germans got Ursula von der Leyen as president of the European Commission, the Germans couldn't get a second position in such a high-level European job. And so Jens Weidmann left his central banking career, I would say, relatively unfulfilled. He never got the top job in Europe, not because he wasn't qualified or he wasn't good. He simply didn't get it because he was German, and there was another German already occupying one of these top positions. And if I think of Jens Weidmann now, I think he would bring exactly the kind of profile to New Zealand that I would like to see. So he comes from a central banking tradition that is absolutely focused on price stability, that has a serious reputation as a central bank. And he also brings with him the understanding of politics, because he was a political advisor once. And if you give him now the chance to clean up the mess that is left behind by Governor Orr, I think this could be quite an attractive position for him. And it would help the RBNZ, because the RBNZ would get an immediate image transfer from the figure of Jens Weidmann and from the previous organization, the Bundesbank, that he led. So if I played fantasy football or fantasy central banking, Jens Weidmann would be my number one choice.
Oliver Hartwich, the Executive Director of New Zealand Initiative, thank you so much for coming on to When the Facts Change. Ngā mihi nui.
Thank you very much.
Kia ora, I'm Claire Maybe, the Spin-Off's books editor and host of the upcoming Spin-Off Book Club live in Wellington on March 13. Join me and special guests Courtney Johnston, Duncan Sarkis and more to chat reading, writing and books. Tickets on sale now at thespinoff.co.nz/events.
Employee Appreciation Day is March 7th, and a Starbucks card is the perfect way to say, thanks for all you do. Have a smaller team? You can send up to 10 e-gifts in one transaction from the Starbucks app or online at starbucks.com/gift. Or you can also send physical or digital cards in bulk at starbuckscardb2b.com. No matter your team's size or location, Starbucks has got you covered.
I think I just won my taxes.
Yeah?
I just switched to H&R Block in about 1 minute. All I had to do was drag and drop last year's return into H&R Block, and bam, my information is automatically there.
So I don't have to go digging around for all my old papers to switch?
Nope.
Sounds like we just leveled up our tax game.
Switching to H&R Block is easy. Just drag and drop your last return. It's better with Block.
So that was Oliver Hartwich. Now let's have a listen to our interview with Jarrod Kerr, the Chief Economist at Kiwibank. Kia ora, and welcome to When the Facts Change to Jarrod Kerr. I wasn't expecting to see you so soon, but stuff has happened. Big stuff has happened. We're here on the afternoon of Wednesday when the Reserve Bank Governor, out of the blue, announces his resignation with effect at the end of this month. What did you think?
Well, I mean, officially, quite a bit of a surprise, but then unofficially not a great deal of surprise either. So I think the reaction in financial markets matches my reaction, which is a little up, little down, not a lot change. particularly in the way monetary policy is being conducted and is likely to be conducted going forward, which is the big question. Like, does this mean we're going to get? No, I don't think we'll get two different outcomes. We've got a very, very safe, capable, I would say exceptional pair of hands coming in the form of Christian Hawkesby. He used to work for the Bank of England. He's done a lot of work for a local fund manager here called Harbour. He's well known, well respected, and even if he just plays that interim role for the next 6 months or so, safe pair of hands.
So just looking back on the last 6 years, Adrian Orr has not been a quiet central bank governor, one that you hardly ever hear about, and hardly anyone knows his name. Everyone knows Adrian Orr after the last 6 years because he's done stuff. And particularly during COVID and since, it's big news when interest rates change. It's big news when the Reserve Bank decides to buy government bonds with money it's just printed. It's big news when they talk about possibly doing negative interest rates. There'll be a lot of people going, oh, I know that guy. So what do you think his legacy might be?
Well, I mean, you have to look at the COVID period, right? Because that was his... that was the crisis that he faced, and I think initially, an outstanding job by the whole of the Reserve Bank. They slashed interest rates. They did QE, like you say, the LSAT program, which was instrumental in ensuring confidence in the market. I think their initial response to COVID was great, absolutely great. Did they go too far? Yeah, I think a lot of central banks did go too far. Getting the banks ready for a negative interest rate was something that I personally pushed back on quite fiercely. I completely disagree with negative interest rates, but I think he had a willingness to do whatever it takes, and that's kind of what you want from a central banker in those situations.
And we had, of course, the dramas around COVID. There was the Reserve Bank intervention in the bond markets to stabilise them, to buy government bonds to essentially drive down long-term interest rates. Then there was, of course, the removal of the loan-to-value ratio restrictions and a funding for lending program of low-rate lending to banks to help them lend into the economy. And it didn't really take until late 2021 before we started to see interest rates starting to rise again. And the Reserve Bank of New Zealand was one of the first to do it. How could they have done it differently so that there wasn't too much stimulus in the economy? Because in retrospect, and everyone can do retrospect pretty good, but at the time, during 2020, late 2020, let's say, do you think it would have been realistic for them to stop printing money, to start putting up interest rates, to reimpose the LVRs more quickly?
Oh, yeah, I think definitely with retrospect. But don't forget, I mean, you and I were doing lunchtime podcasts, every day. This is how serious things were. And we didn't know what was going to happen. We didn't know how bad it was going to get. All we knew is that you do whatever it takes to stop a really long, hard recession that could become a depression. We didn't know how bad it was going to get. Could they have stopped earlier? Absolutely. Absolutely, they could have stopped purchases of government bonds earlier and put the LVR restrictions on sooner and all of that, yes, with the benefit of hindsight. But I ask you this. As a central bank, would you rather face an economy that's in depression, or would you rather face an economy that bounces back too hard, too fast, too strong, and has too much inflation? I would rather fight the strong economy that has too much inflation, because I know how to fix that, and that's just hiking. You just hike till it hurts and inflation gets returned. An economy that dives into a recession, and it's really hard to get out, much harder to get out of. So that's your risk reward as a central bank. You're always got a bit of an asymmetric reaction function, which you're more likely to cut than hike.
So then the Reserve Bank put up interest rates about 100 basis points higher than, let's say, the Reserve Bank of Australia, and held them there for a long time. Up until August of last year, it was high. It was painful. And of course, now we've had some big cuts and another 50 basis points a few weeks ago. Do you think the Reserve Bank held interest rates too high for too long?
Absolutely. And it was something that I have been pushing hard against them but from the end of 22. So our data at Kiwibank started turning in the second half of 2022. We put our hands up saying, actually, you don't need to keep hiking. I think you've done enough. But sure, they went from, our recommendation was to stop at 5. They went to 5.5, and they held it there for too long. We resisted the whole way. But this time last year, they were still calling for hikes, right? And between February and May, they actually started calling for more hikes, right? That's not that long ago. And then they did a complete 180 between May and August and started delivering cuts. Now, what annoys me is the way they communicated that turn. I don't care that they turned. In fact, they did the right thing. They turned and they started cutting, and I applaud them for that. But the communication was suboptimal, to put it politely, between May and August. And I think, that is part of that legacy. I think looking forward, the new governor has a real opportunity to improve the communication coming out of the bank and improve the transparency. The Reserve Bank used to pride itself on being one of the most transparent banks on the planet. We all love the fact that they do an OCR track, but I think there's room for improvement there.
Because there has been some change under the governor, some that he's pushed for, and some of them from the new government. So we had, or the new governments, so we had the Labor government bring in, it wasn't quite a dual mandate, but it certainly was a keep an eye on employment, will you? And then the new government came in and said, no, it's just inflation. And also through that time, we went from a single decision maker in the Reserve Bank governor to a monetary policy committee. Of those things around mandates and committees, do you think there's a need for change there at all by any new governor?
I think most people, most academics, most followers of central banks, would appreciate the fact that you've gone from a sole decision maker to a committee. I mean, I think that's definitely an improvement. The mucking around of the mandate was unfortunate because New Zealand prides itself on being, or the RBNZ prides itself being on the first, to mandate inflation, the first proper inflation targeted globally. They're proud of it. They weren't proud of these mandate changes because they effectively did nothing. So going from focusing purely on inflation to adding employment, any Kiwi who's suffered their way through an economics course will tell you that, hey, Bill Phillips, that Kiwi economist, invented the Phillips curve, which is the relationship between inflation and the labour market. So all central bankers globally do look at it through that lens. Of course, in trying to get stable inflation, you're trying to maximise employment, at the same time. So on, off, I argue it's done nothing to the actual conduct of monetary policy.
Excellent. Jarrod Kerr, thank you so much for coming in at short notice on what we would see as an emergency when the facts change podcast, because it is a big deal when the Reserve Bank governor goes 3 years before the end of his term. And on when the facts change, we love it when the facts change, and they certainly have this week, and I appreciate you being on the show. Ngā mihi nui, Jarrod. When the Facts Change was brought to you by the Spin-Off Podcast Network, together with Kiwibank. Visit kiwibank.co.nz to find out how Kiwibank are making Kiwi better off.
The Spin-off Podcast Network.